Hi, Bo here from High Tech Investment, and in this particular video we're going to have a look back in the last year together with the Profit Retriever EA. We are basically coming up to the 1 year birthday of it, and this has definitely been a very interesting travel for the last year. We have definitely learned a lot about the Profit Retriever. We have gotten a lot of profits, but also we have had a couple of setbacks. And that is quite normal when you are trading a new EA. You're trying to understand it. You're trying to learn a bit more on how you can actually squeeze some profit out and at the same time reduce the drawdowns. Sometimes it works, sometimes it doesn't. We all know that Forex is a difficult market to work in. And most people say that around 80% that trade within the Forex market loses the money. We have been very lucky with the portfolio overall, but we also know that once in a while, these drawdowns come in, especially on the Profit Retriever here. It's very heavy on drawdowns, and we have actually seen in the past couple of weeks, it has been extremely well behaved. So the drawdown was less than 5% over our entire portfolio, which was extremely low. And then the week after, everything simply goes the complete opposite way. And then that actually indicated to us that we needed to make a bit of a video on all the different settings, all the different things we have been through the year to understand exactly what we are trying to do ourselves and what you yourself as a trader or a copy trader also has an influence on, or at least to understand exactly what we as the traders are up against here. So we're going to go through a range of points that we believe is very, very important to understand. Now, this, of course, is not investment advice. This is only our own experience that we are sharing with you here today. So obviously, you need to understand exactly how it trades, and it's entirely your responsibility. But we are trying to make things easier for as many traders as absolutely possible. And the profits and the results definitely shows, but we will have these hiccups. And the idea here is to try and minimize the hiccups in the future. Definitely from this year to next year, we hope to be even better. So let's get started and have a look at some of the points that we will go through today. Now we're going to start off with the most important part, and that is basically try and trade the Profit Retriever within a portfolio of 5 or 10 or even more EAs, depending on obviously how much money you have to set everything up. The idea here is that the Profit Retriever sometimes can lock itself into a drawdown for days, weeks, or even months, and it takes a bit of time for it to come back out again until it basically retrieves, as the name also says here. You have to do it in a portfolio approach in order to get a more smooth equity curve. And if you do that, you can see the graph we have here. This is ours. This is the one we have been trading for the past year. And obviously, it makes a big difference if you can do that and basically ignore one or two accounts that go into either heavy drawdown or actually also crashes. Then the rest of them will still make it up, and means that you might not eventually lose anything looking at it over a month. You might actually still come out positive despite one of the accounts has crashed. So very, very important. Try and spread the risk as absolutely maximum in the portfolio. That means again here that the Profit Retriever needed to be traded so on individual accounts and not one big account. So don't put 10 EAs on a $100,000 account. That is definitely not recommended. You trade each individually. Now the next part here is also very important, and that is obviously trade different currency pairs as you saw here before. So within the portfolio itself, make sure you have a good diversification so within the portfolio. And we also mentioned both here in the video, of course, but also on our website, that even though we hear the minimum of $10,000 quite a lot, we know that things can go wrong even with $10,000. Even though we have done all the testing, we have seen that in the past. And that's why we always go out and say, okay, take a different approach and put $20,000 on it, which of course not everybody has just lying around. But if you then have a cent account instead, it doesn't really matter much that if you have put $100 in or 200, it will basically just make the account twice as safe. It's simply just not worth the risk to take. We, as a trader here, we normally set them up with $10,000, but that is our decision to do it like this. And obviously we don't recommend you to do the same. We recommend that if you do the normal Forex pairs, then 20,000 or $200 on a cent account is the way to go. You can obviously also see more on our portfolio trading overall on the website itself. And as always, we will obviously have the link also in the description for this video below. The next interesting thing here is obviously you can also, apart from the Forex, go into metal and index trading. So that means that you can now also trade the FTSE 100, for example, or the US 30 index here. Or you can go and do the gold and the silver instead. Obviously, these are a bit more complicated. So it's more for experienced traders within here. And we also recommend not just to trade it on a $10,000 account. Yes, we do that. And we even try and minimize the risk on a 10,000 account. But it is a bit more difficult. It can be a bit more temperamental. So we are normally suggesting 30,000 for that account, or $300 on a cent account. So just be aware of that. And we also have that information on our website here. So where we again explain that the account sizing for metal index and Forex is quite important. So make sure that you try and follow those recommendations here. Obviously, it's entirely up to you if you want to take a higher or lower risk. That's entirely up to you, as we said. But if you go, for example, for the trade receiver here also, there's another way of you can either increase or lower the risk itself. So the trade receiver is basically the copy trading service here, and you can copy it one-to-one, meaning basically the same lot size as we do. If you're not happy with the profit and you're actually happy with the drawdowns, you can actually increase it, so you will have a higher profit than we have. Or you go the other way and saying, well, the equity curve, it looks very nice, but the drawdowns, when they come, they are a bit too big for my liking. And you can then turn it down to half the size, for example, of we have. So there's plenty of opportunities within there, even though you don't own the robot, but you're simply just copying the signal in. You can actually also turn down the risk up and down yourself. The next part with the profit retriever here is that the leverage minimum has to be 1 to 200. That is what we are trading on, and you definitely shouldn't go any lower. If you go any lower, you need actually more cash on the account itself, and you can't go higher. So we know that some with the profit retriever even go to 1 to 500 or 1 to 1,000. So that is also something that will work, but the minimum is 1 to 200, and we prefer not to go too high on the leverage either. The next important thing here is the spread that you also have to consider when you are trading either yourself or especially on a cent account here, or if you are copy trading. So the cent account normally has a higher spread overall, means that the broker takes a bit more of the profit off and you will get a bit less compared to the normal accounts. And it also depends a bit on exactly what are the grids. So for the EA itself, if it's set up as a very tight grid, so it means that you have a grid set up, so something like 6 or 10, you have to be very aware of the spread also. So there's normally a bit of a calculation to be on the safe side here. Means again that the grid has to be 3 times higher than the spread. So if you have a spread with your broker of 5, then make sure that you're trading an EA that has a minimum of 15 on the gap. Otherwise, you could actually go and get a minus on every single trade that you have. And that is definitely something to consider. And that brings us to the next part on always demo trade, new settings and signals first, especially when it comes to things like the spread here. This is something that we have personally learned also, where we set up multiple different accounts. And then we figured out here also that some of these grids that was very, very tight basically made a loss every single time that it traded. And quickly we got that one stopped again here, and then had to add other forex currencies on it instead. That was better to trade with it. So you have some limitations definitely when it comes to the send accounts and what exactly you can do. And even if you have doubts also when it comes to metal and index trading, as I mentioned here earlier, then it's very important also that you at least go and get the demo trading with the broker that you want to use and try it out for a couple of days to make sure that the settings are okay and that things are not going in the wrong direction. It takes the trades exactly as it should. And you can even leave that one on for a couple of weeks until you are absolutely sure. Don't be too eager to start throwing away your money until you're absolutely sure that this will work on that particular account. The next part here is the more technical part, lot strategies, gap strategies, as I just mentioned a bit about here. And I've done quite a few videos on this, on how I set it up and do it. I think it's quite different from what a lot of other people do. That doesn't necessarily mean that the results is extreme good or it's extreme worse here. It's just a different way of approaching it on a technical way. And some of these videos that you see on the screen here is the one we have done in order to try and show you exactly how our lot strategy works, the gap strategies we have in here, and how we set up the entire set file. So you will find the gaps and the winning strategies for all this in these particular videos, and I'll make sure that they are also in the description below. Now the next part here is one that is sometimes left over, and people don't really take notice of this, and that is to take out profit regularly again. And in that particular video I showed you here before, there is a graph similar to this. So if we now look at the blue lines here, so it basically indicates that we have 5 accounts of $10,000 and we start trading the profit retriever EA on that particular one. Then the orange is basically the sum for each account. So after a week, after a month, or after 3 months, depending on exactly how aggressive your strategies are. And you can see that some of them have made from 10 to 12,000 on the first account. The next account has made 3,000, so from 10 to 13. And then account 3, 1,000, and 2,000 for the account 4 and 5. And basically when you add that all up, gives you another $10,000 overall. And what we are suggesting here, so when you have your live accounts, you can obviously not do it when you have your demo accounts, but then you can take the money out and you can de-risk yourself like this, or you can also go and set up a new account, which means that you can now add another EA to that particular one and then trade 6 instead of 5. That should also basically mean that you get a bit more profit every single month. And at the same time, so you have also now spread the risk from 5 accounts over to 6. So should one go down, it means that you still have all your accounts and they are still making money for you. And we definitely think that this is an excellent way of doing things. Now the last part here is the manual intervention, and obviously Expert Forex, the developers of the profit retriever, basically says let it run by itself. So you should be able to set up the EA in such a way that you won't get too high of a drawdown and you shouldn't have to intervene. But obviously things can happen, and we have a very good example here. This is one of the first accounts that we actually set up. And as you'll see, it goes all the way back to early March here. And basically it's been trading quite nicely, both in sell and in buy. And it's going quite well all the way through, right up until we had in November. And we made also a bit of a tutorial and a video on this particular one of what exactly happened here. But you can see the price drops incredibly fast all of a sudden, and there's not enough recovery in order to retrieve basically all the different buys that was set, and it just continues to go down. And even you can see the green ones, you can see it in a bit more detail here on the bigger screen. And for that particular one, it's a margin call that comes in and the account is basically blown. So all the settings, yes, they have been adjusted along the way, but we are very, very unlucky here. Simply just that you can see it's done quite a few sells, and then it decided just to switch to the opposite side. And obviously something also happened here within the market itself. So we ended up and not recovering enough. There was simply not enough recovery. So in that particular candle here, which was a buy. So basically from there on, it just went downhill, and the account was basically blown at the end of the day. So obviously we don't like that when things like this happen, and we like to see if we can do anything about it. And the manual intervention would be something like to put in a manual sell order instead. And we have done a few tests on this particular one, and sometimes it works, sometimes it doesn't. Unfortunately, it all depends on how the price develops over time, and also how much of a recovery there will be. One of the things that we have done is we try to set up a bit of a system. So we go in and basically just calculate how much lot size is open on the buy side, for example, similar to what you have here. And then we put in either 30 or 40% of that, open up sell lot size, and then let the price run. If it continues to run there, we open a second one and then guard the first one with a stop loss, so we don't gonna have too many open. And we continue to do so at a lot size again of 30-40% every single time. And that also means that when you get to number 2 or 3 here, so basically you're going to end up with more than 100% of what you have on the buy side. And that should give you a bit of breathing room and should give you a bit of cash. Actually, the equity should go up. But at the same time, what you are basically looking at here is trying to close down some of the biggest lot sizes that you had up here in the beginning. So where the EA normally would do that. So where you can do is you can then close some of the trades. So with the profits that you have made on the sell side, and then take it and close some of the heavy buys in there. That also means that the EA doesn't have to go as far up again in order to recover. But there is a couple of issues with this particular one because the EA doesn't recognize it. So you have to manually close once you get back. So the little line that will normally tell you when you are slightly in profit, that will not move. So the robot will basically still remember all the trades it has taken, so that you have to do manually. And obviously when that happens, and if you do it right, then and with a bit of luck, of course, also definitely, that can close some of the heavy ones. It will basically move the profit point down through the graph, and then you will be able to recover. In this particular case, it's extremely difficult because there's no recovery at all, as you see here, and that is almost impossible. So even to try and test your way out of. So because it will always try and find some of the good settings to overcome something particular like this. But obviously we're working on it, and that's one of the things that we either decide, well, this currency is simply not worth taking the risk on because it does that too often, or we can open up the gaps, but that doesn't always mean a positive thing. It could actually also mean that then we don't really cash in much. And sometimes it could even be a drawdown because it doesn't really recover. So we have covered that in some of our videos here also, where we have to be very careful. It's a bit like the Goldilocks zone here with the Earth and the planets, that you have to get it in the right distance, so not too close and not too far away, in order to get the optimum profits. But there's a couple of other ways also that we are now looking at to try and see if we can accommodate for some of this, because we know that this will happen, but we just want to minimize it as much as possible. So all the things we just went through, you can see them in bullet points here on the screen. And we believe that these are some of the most important ones to take note of when you are trading the profit retriever. It will definitely help you trying to make sure that you are surviving. So every week, every month, and hopefully also every year. As we said, things will happen, and we also have to consider within the trading portfolio that we have. And we do expect about one account, so for more than 20 accounts here, to blow every about 3 months. We definitely hope and try to make it a bit less. But again, this is the Forex market. It's not really our decision at the end of the day. There are so many outside factors that has an influence on it. And we saw that last week. So with one of the high-tech banks in the US that all of a sudden make things tumble. We see a lot of news coming out of Europe and out of the States and out of Asia. And all these things spike and can really throw off the profit retriever. So it might not be set and forget EA, definitely not. So we are always adjusting and trying to adjust to the market itself. But these things will happen. But if you try and take some of these things into your consideration when you're setting them up, there's definitely a better chance that you will survive most of these common things. And I hope that this has been a bit of a eye-opener for you. So we definitely put new bullet points down, not on a daily basis, but certainly on a weekly, on a monthly basis, trying to understand and trying to trade the profit retriever better and better. So to make sure that we get the best ratio in between the profits and the drawdowns. And that's what it's all about when we are trading. So I hope that you like this video. Please give us a thumbs up if you do. And I hope to see you on one of my other ones. Bye-bye.